Hello, my name is Dominic Brennan and I'm the Managing Director of Clos Fine Wine. In this video I want to look at unravelling some of the mysteries of fine wine investments that are most liquid of alternative assets. Fine wine like Rolexes and whiskey and vintage cars and fine art and Hermes bags and scarves, for example, are part of a subset of investment types called alternative assets or passion investments. And I believe passionately that fine wine offers investors a brilliant opportunity in terms of diversifying their investments and creating a balanced, diversified portfolio of investment holdings. So in this video, based on my fine wine investment guide, which you can access here, which includes a lot more information than I can put in this video and is completely free, I'm going to try and unravel some of the mysteries of investing in fine wine and suggest some of the benefits of it and things to look out for a balanced portfolio of fine wines. So let's get started. So a good place to start would be to look at some of the benefits of investing in fine wine as an asset. Now, a lot more of these benefits and lots more information generally is available in my fine wine investment guide, which you can access for free by clicking on the link below. The first point I think to talk about is capital gains tax exemptions. Lots of brokers will trumpet that fine wine as an asset is capital gains tax exempt. The first and most important thing to say is always get proper tax advice. Speak to your financial advisor about it. There are obviously huge benefits if fine wine is exempt from capital gains tax. You're not paying tax on your gains of your investment. The advice given by HMRC is that a wasting assets or wasting chattel, which fine wine is, like a racehorse, for example, is because of the sort of the things that can happen to a case, with corks, with storage, provenance, breakage, is anything which has a predictable life of up to 50 years. Now, with fine wine, lots of wines will last slightly longer than that. Many wines won't last 50 years. So it's a real grey area. But I would say that a lot of wines are potentially applicable for exemptions from capital gains tax. And that is a good place to start. Two, fine wine is a hedge against inflation. It's a physical asset. So unlike investing in stocks and shares, you're actually buying a tangible thing. You're buying a case of Château Lafite, a case of Chateau Margaux, a case of Krug champagne. And it has a certain value as a tangible asset. It will always be in demand as Krug, Lafite. So it's not like a piece of paper that can end up being worth nothing. And it means in times of inflation, as we've seen over the last 18 months to 2 years, it's more likely to retain the majority of its value, which fine wine largely has done. The third thing to talk about is that fine wine outperforms the majority of other alternative asset types. So the graph below shows you the Knight Frank wealth reports from 2023, and it lists a number of different asset types like jewellery, cars, and so on. And fine wine is only bettered over a 10-year period by whiskey, which is much more volatile. So when it comes to diversifying your investments, fine wine has a real wealth of data to demonstrate that it has delivered over decades and decades and decades, whereas some investable assets come and go, like bags, Hermes scarves, watches, whiskey, so on. The fourth thing to say is that one of the great diversification benefits of fine wine as an asset is that it has a traditionally low correlation to equities markets, like the S&P 500, for example. So what that means is that it's largely detached from equities markets. So in times of real financial stress and turmoil, like the 2008 financial crash, or during the early stages of the global coronavirus pandemic, fine wine sort of insulates the investor against general market turmoil, and that's a benefit, especially when you're trying to diversify your investment holdings across your entire investment portfolio. I think one of the key things to think about when considering investing in fine wine is looking at how the global events can affect and shift the fine wine market. So in my fine wine investment guides, which I'll keep talking about, the link is below, I look at about 8 or 9 different global events that have affected the market. But for this video, I'm looking at 4 brief ones. So the first is, as you can see on this graph, the September 2008, when Lehman Brothers filed for bankruptcy following the nationalisation of Northern Rock in the UK. So in the financial crash, you can see straight after that moment, the fine wine 100, which is the key fine wine index, dropped a big chunk. So the next global event is in July 2012, and that's when China announced a crackdown, an anti-corruption crackdown on gift giving between its members. So over time, fine wine had become one of the key, most favoured gifts to give between party members in this sort of corrupt practice, and that had driven up global prices of fine wine quite substantially. And you can see that shortly after the tap is turned off in July 2012, the market slides because you're cutting off a large chunk of the buying market. The third point to look at is July 2016, which is when the UK voted for Brexit. So after Brexit, overnight sterling weakened considerably, and you can see demonstrably on the graph how the Fine Wine 100 index, the key index for fine wine, sort of accelerated and appreciated hugely in value. And that was a sustained period of growth for a good sort of 4 or 5 years. And that was because there was a currency benefit. So because sterling was weak, rest of the world buyers, either in US dollars or in euros, were able to buy UK held stock, sterling stock, at a currency advantage. So it was discounted stock for them. So the market sort of piled in. So there's an example there of how currency can affect fine wine. The final point is in March 2020. So as coronavirus started to circulate the globe and various nations went into lockdown, there were genuine fears. Obviously, financial markets tumbled. There were fears about people's ability to pay for things. So what happened in the fine wine world was the annual program called En Primeur, or Futures, of selling a Bordeaux vintage, which happened in sort of May, June, July, August of 2020, saw a really good vintage, a Bordeaux vintage 2019, that was released at substantially reduced prices because there was a real fear in Bordeaux that people wouldn't buy the wines because there was no money to go around. In fact, because people were staying at home, sales of fine wine globally went through the roof because there wasn't much else to do. It was something people got passionate about exploring in their free time. And people had money to buy a really attractive, highly rated, critically acclaimed vintage at much lower prices than other vintages before it. So you can see then from March 2020, figure 8 on the graph, the fine wine market, the fine wine 100, climbs and climbs and climbs for another 2.5 years. So what are the key fine wine investment philosophies? Well, I can only talk about how I operate. So as the director of Clos Fine Wine, I have a certain investment philosophy. Other businesses will have their own, and I can come on to that later. But for me, there are some of the key aspects I look at are included in this video, but there are a lot more in my free fine wine investment guide, which you can click on the link below to access. The first thing to look at is outstanding vintages. So largely, the best vintages in, say, Bordeaux, Champagne, Italy, Burgundy, will produce the greatest wines. They're the most sought after wines, and they will go up in value as inverse supply comes into effect. Inverse supply is that there's only a certain amount of each wine made each year from each producer, each vintage. And over years, those bottles are drunk, they're lost, they're damaged, they're smashed, whatever. So that supply of that wine goes down year by year by year. Wine is an asset which obviously gets better the older it is. So you have an asset where as it diminishes in supply, it becomes more desirable, which drives up demand, which drives up price. So buyers tend to look for the best vintages, although there are obvious exceptions and caveats to this, which I'll go on to some of my examples later. The second thing I look for is the highest rated wines. That tends to come hand in hand with outstanding vintages. So there is a scoring system, the 100-point system, which is a bit mad because you rarely see a wine that's rated lower than 80. So it's a 20-point system, which some UK critics use. Nevertheless, there is something about a wine which is 100 points, 99 or 100 points, perfection or potential perfection. And these are the Hall of Fame wines that drive the market and are sought after by buyers and investors and collectors. Because at the end of the day, you might invest in fine wine for 5 years, 10 years, 15 years, but who will buy your wine at the end of it? Well, it's often drinkers, hotels, bars, and often collectors. People who want to buy and drink the wine and enjoy it. So the best wines from the best years tend to go up in value. And in terms of critics, a good example is Robert Parker Jr., who drove the market. So for For decades, as the head of head writer for the Wine Advocate, an independent wine critical magazine or journal, he developed the 100-point scoring system, and the market was sort of beholden to him. If he gave a wine 100 points, then those wines were the most sought after wines, and their value went up as an investable asset. And that's, I suppose, in hindsight, a little bit concerning that one man can change an entire market. What you actually found was that lots of producers around the world started changing their philosophies on winemaking to create and craft wines which they thought Robert Parker would like. More oak, big sort of Californian style reds in Bordeaux. Thankfully, we're now returning to a more terroir driven style in Bordeaux, but that's another story. After Robert Parker Jr.'s sort of retirement, we had a sort of a splintering of critical opinion. But I mean, there are some key critics that matter most. There's Neil Martin from the UK, who's a much respected critic. Jane Anson from Inside Bordeaux. They're for me the top two. But there are loads of esteemed critics around. William Keeley from the Wine Advocate, and their 100-point scores, if they ever give them, which are rare, do still drive the market demonstrably so. So in the past, Neil Martin's given 100 points to certain wines, and their value overnight has gone up. It's really important that when you're building a fine wine investment portfolio, whether with your broker or with me, that you strive for, your investment amount allowing, of course, a mix of different regions. So I would suggest that having Bordeaux is not enough, although it should be the bulk or the bedrock of a good portfolio. Fine Champagne, vintage Champagne, the wines of Italy from Tuscany and Piedmont in the north, the Rhone, Burgundy, and so on. They're the key regions which demand your attention. There are other regions which make fantastic wine, which I personally think have no real investment value there. There's no data to suggest that there's a clamour for, as stunning as some of the wines from Greece are, Greek wines as an investment asset. Just to use an obvious example. So whilst wine should be enjoyed for drinking and for pleasure, if you're treating it as a cold asset, it's important to look at the key wine regions of the world where there is demand. The fourth and final thing I'll be looking at in this video, although there are plenty more in my free fine wine investment guide, available in the link below, are sub-index outperformers. So in the LiveX arena, LiveX is the London International Vintners Exchange. It's sort of the trading platform globally for fine wine. And they have their key index, which is the Fine Wine 100, which we looked at before with some global events and seen how that affects the market. But there are also sub-indexes. So there's an indices for Champagne, the Champagne 50, the Italian 50, the Rhone Index, the Bordeaux Legends Index, and so on and so forth. And it's really important, as with any investment, you're looking for a wine or a number of wines which outperform their peer group. So for example, and I look at this later on, Champagne, the Champagne 50 has saw sort of inexorable rise over about 15 to 20 years. And during that time, as it was consistently growing year on year, a certain number of wines, certain producers were outperforming it substantially. So Salon Champagne is one of those examples. I'll come on to that later. But it's really key that you look at sub-index outperformers. So just to recap, some, but not all of my fine wine investment philosophies, wines that are from outstanding vintages, that are critically acclaimed, from a range of respected, treasured regions, and which outperform their peer group. They're the things I would start to look for if you're investing in fine wine. So I'm now going to look at 3 examples of wines which largely fit the criteria I've mentioned already, or some that perhaps buck the trend. And the first I'm looking at is Salon de Mesnil 2004. Salon is probably the most sought after champagne in the world. It's made in tiny quantities, and it's only made in the very, very best years. You may go years and years between declared vintages of Salon. When it's not made, it goes into another champagne that they make. So Salon is really the apex of vintage champagne. For that reason, we've already mentioned inverse supply. So the less there is of a really sought after wine, in this case Salon, there's not much to start off with. Over time, it's going to go up hugely in value. The other thing to consider is that vintage champagne is largely only released about 10 years after its vintage. So that's because producers tend to want to keep it maturing for 8 to 10 or even 12 years before they release it to the market. So Salon 2004 was released in about 2013, 2014. So you're already getting an asset which is matured. It's not perhaps fully mature, but it's mature for 10 years. It's not been released immediately. So you have a scarce asset from the start, which is already ready to go. So for champagne as a market, it's probably the most global wine brand. Champagne is not just drunk, at home. It's drunk in bars, in restaurants, in nightclubs, on yachts, on cruises, on aeroplanes, in airports. It's one of the biggest global cachets. And so you're looking at an asset type that's being released in 2004 that's ready to go. It's been released in 2014 that's ready to go. Salon, since its release in 2004, has gone up 259%. That's astonishing. And it's worth pointing out that I am cherry picking some great, outstanding examples. There are other vintages which haven't done this well. And there are lots of wines which don't do anything anywhere remotely near this sort of level of appreciation. Indeed, there are some wines that drop in value a chunk. But for the purposes of showing criteria, Salon 2004 has done extraordinarily well. And the Champagne 50 market saw a bit of a boom really around 2018 to 2021 really, where lots of brokers saw that it was a market on the rise, and so lots of investors piled their money into the top wines, so Krug, Dom Perignon, Cristal, Taittinger, Comte de Champagne, and Salon. That equates to 35% a year. So in terms of Salon, we have scarcity, we have an index outperformer, so it's outperformed the Champagne 50 consistently, as you can see on this graph. So this graph shows you the Champagne 50 index, and then this graph shows you Salon. And Salon, although it's not quite clear from the graphs, has largely outperformed it substantially. So that's the first example. The next example is Château Lafite Rothschild 2014. Now, Château Lafite, owned by Domaine Baron de Rothschild, is one of the superstar Harlem Globetrotters of wine branding around the world. They make astonishing wines. It's one of the famous 5 first growths of Bordeaux. If there was sort of a football-style table system, the 5 first growths would be the Champions League. So they are Château de la Tour, Margaux, Mouton Rothschild, Aubryon, and Lafite. Now, Lafite is sought after, and it has consistently delivered for investors. Although the reason you should buy Lafite is to drink it and enjoy it. It is art. It is poetry. It's one of the most stunning things you'll ever get to try if you try it, and I recommend you do, because it's astonishing wine. But for the purposes of this video, looking at how it behaved in the market, 2014 was an interesting Bordeaux vintage. It was good to very good, not a great vintage, but certainly good to very good. Some of the wines were very good to excellent. And it came on the back of a 2013 vintage that was a complete washout in Bordeaux. It was a disaster. Wines were largely very, very poor. Critical scores, which I talked about before, were very low. So people didn't buy the vintage. They voted with their feet, and they refused allocations of wines, including Lafite. So the following year, when we had quite a good vintage, cash levels were low for the chateau. And they decided to reduce their prices substantially to try and drive trade of this new 2014 vintage en primeur, or as a future. What that meant was that Château Lafite Rothschild, which is a really highly rated, very accomplished wine, was released at a really keen price. And over the next year or two, going into 2016 and 2017, the market started to realise that there was a bargain to be had here, because it hadn't sold out. So I had clients that took, on my advice, Château Lafite 2014 in 2016 and 2017, and it delivered really well because its place is in the the upper levels of Lafite echelons, the Lafite's verticals, if you will, in terms of its critical score, but its price was near the bottom. So since release, it's gone up 98%, and that's astonishing for any asset, and that's 12% a year, which is not to be sniffed at. Lafite as a wine is a wine which, as I say, delivers consistently. It has a second wine called Carouade de Lafite, which has often performed well because it's a slightly cheaper, more accessible way of owning the brand, and that's also a wine to look out for. My final example is not of a wine from a vintage per se, but of a producer. And this producer is Château Figeac on the right bank of Bordeaux in Saint-Emilion. And I've mentioned Château Figeac before when I talked about my analysis of the Bordeaux 2022 en primeur campaign. Figeac make brilliant wine. And as there is a classification system or a league table on the left bank of Bordeaux, I've covered those 5 first growths, of which Lafite Rothschild is one of them. Saint-Emilion on the right bank has its own league table or classification system, which begins largely at sort of satellite village level, and then you have Cru Classé, which is not a properly recognised level. It's more of an ASC level. But then we have Grand Cru Classé as the first tier. Then we have Premier Grand Cru Classé B, and then Premier Grand Cru Classé A. Château Figeac was upgraded from Premier Grand Cru Classé B to A a couple of years ago in 2022. The re-evaluation of the classification system happens roughly about every 12 years. And what it really means is that lots of the chateaux put forward their cases with lots of data and bid documents, essentially, to the governing body to try and get themselves elevated upper level, because it means more exposure, more prestige, and therefore more sales and more demand globally. What happened at the time was we had some of the previous Premier Grand Cru Classé A wineries, like Château Angelus, Château Cheval Blanc, as an example, pull themselves out of the system entirely. So they decided to withdraw from the classification system because they thought it was too onerous, having to prove every 12 years that they were worthy of the status they probably rightfully claim. That meant at the top of the tree there was only one producer which remained at level A, which was Château Pavie. So for a wine to be elevated out of its classification system to the highest tier, which happened to Château Figeac, is a rare thing, a really, really rare thing in the wine world. But it happened. And what it meant was that overnight, quite literally overnight, jumped up in value. So the first example here is 2016, and you can see at the point here in 2022 of the classification being announced and the upgrade, the value jumps up. The next example here is 2010. Again, in 2022, when the classification is announced and it's gone to the highest level, value jumps up. Going back as far as 2005 vintage, same thing happens. There's a jump, a leap in the value on the market. The wine is traded much more highly. So hopefully that goes to show that it's not just critical scores and vintage and outperforming the sub-index that can affect fine wine. The actual classification rules in different regions have an impact as well, and they affect global consumer demand, which will drive up the prices. Finally, some things to be wary of if you're thinking about investing in fine wine. Now, I've worked in the wine industry for 8 years now, dealing with fine wine investments. And there are lots and lots and lots of companies globally that are essentially dodgy. You only have to type in fine wine investment scam to the internet to see that there are lots of companies that will take your money and not deliver you wine, or that will deliver you substandard wine. So it's really important, I think, to consider a few things. Firstly, when you invest with a company, they should give you a detailed explanation of why they're proposing you invest in certain wines. It's not enough that you just send a list of wines and ask to pay an invoice. With me at Clos Fine Wine, every portfolio I put together is completely bespoke. Obviously, there are wines I favour, but I always go back and look at the data, the prevailing data, the historic data, and I'll put together a substantial document which I'll send out to interested parties, proposing wines I think they should invest in, but also why. So I'll suggest that it's because there's an upcoming classification change, or it's just been re-rated to 100 points, or that this graph shows it's on the way up. So ask questions, ask why a broker is suggesting you invest in a certain wine. I've seen fine wine lists that are readily available on places like Reddit from supposedly the world's leading fine wine investment brokers, which include wines which are sort of table wines, sort of Premier Cru Chablis, and wines from regions which have no investability at all, some companies will take your money and sell you wines that are from their stock just to get rid of them. So it's really important that you interrogate your portfolio manager or the person that's proposing a portfolio to you about why those wines are important. Second thing, fine wine is not an FCA regulated market in the UK. So it's really important you do your research and take advice from your financial advisor, your tax advisor as well. Personally, I behave as if we are an FCA regulated company. We try and behave as much as we can. So do your research on companies, the people you meet. If you can meet them face to face or speak to them on a video Zoom call, then I think that's a really positive thing. Another thing to consider is that when you have paid for a portfolio of fine wines, that you have ownership of them yourself. So it's an important distinction. I've helped people in the past who have come to me and either they've not heard from a company for ages, or the company's gone bust and run off with their money, and they have no financial recourse because the whole time the company that sold them the wine owned the wine themselves. It's really important when you invest with a broker that it's made clear that you own your wine. So for example, if you invest with Clos Fine Wine with me, we store our wine at LiveX's bonded storage warehouse called Vine International, which is the gold standard of fine wine investment storage. It's it's temperature and humidity controlled, obviously, but it also is rigorous in its checking of cases and bottles for quality condition checks, provenance checks, and each case that comes into Vine gets a specific unique identification descriptor. So those UIDs are unique to that particular case. So you should be sent those UIDs for physical wine, and your wine should be held in your account under a sub-account in your name. That means that you can go to a bonded warehouse like Vine and say, I'm Mr. Smith. Here's my sub-account. Here are my UIDs. Please can I have my wine? So if anything happens to the company you're dealing with, you have control of your asset, and you can sell it with someone else, or have delivery of it and drink it, or sell it. It's really important that you, again, ask those questions of your brokers. I've dealt with people in the past who have been missold wines. They've been sold wines which would readily fit lots of the criteria I've talked about in this video, but they've been sold them at perhaps double the price. So it's really important that not only are you being sold the right wines, but they're selling you them at a proper price. Some brokers will charge you a brokerage fee to get the wine from the open market. So if a wine costs £5,000 for 12 bottles, they'll charge maybe 10% or 8% on top of that to go and get the wine for you, and then they'll charge you a management fee as well. What that means is that your wine has to appreciate by 18% before it even lets you break even. At Clos Fine Wine, we charge a 12.5% upfront fee. That's basically 2.5% every year for 5 years, and it's upfront, and that's the only fee there is. So if we go and get a wine from you from the secondary market, you pay exactly what we pay for the wine, and that means your wine starts appreciating in value much sooner, and you start making a return. All things being the same, the market's behaving properly. So I hope that's been a useful video for you. As I say, there's much more information included in my 28-page fine wine investment guide, which is completely free. There are no catches. Click on the link below and you can access that. All you have to do is put your email address in and your name, and you can download it from that link. And that includes information on the fine wine market, the benefits of investing in wine, all of my key criteria for investing in wine, taxation issues, storage and provenance questions, and it includes a couple of case studies of wines themselves, and also I've got several example portfolios which are really interesting to look at and see how they performed over 5 and 10 years for my clients. They're quite impressive. If you've got any questions at all, either about fine wine in general or investing in fine wine, or indeed if you'd like to consider doing so with me, I'd be delighted to hear from you. Please do drop me a line. All my information is on our website. And also, if you enjoyed the video, perhaps you might like to subscribe or click like on the video. That always helps get the word out a bit more. But for now, thank you very much for watching this video, and I hope to see you soon.